Hello everyone, welcome to this week's weekly market view for Monday the 14th of October to Friday the 18th of October 2024. My name is Vishal. Let's get started. All right, let's kickstart our analysis with the Nifty. The markets have just closed now. Let's quickly have a look at the Nifty levels and the key levels on the Nifty chart. So if you look at last week, we had plotted some key levels of demand on the Nifty. We had plotted this rally-based rally level of demand, which was more or less a level on top of level. And we can see how the Nifty came into this level and has pretty much paused in this level. And now it is trying to push to the upside. Now we do have a temporary supply zone over here, which is probably acting like a obstacle for this level. But more or less, I think eventually after this consolidation, we might see a push to the upside, specifically towards this area of supply, which is the gap area. So key levels to watch out for this week, 24,714 to 24,524. Any breach of this level will probably put more selling pressure on the Nifty towards 24,000 odd levels. But other than that, now Nifty should start consolidating and the bias might be a little bit more sideways to bullish on the Nifty now. And the next move is most likely towards 25,500 and then towards 26,000 ultimately. All right, let's move on to the Bank Nifty index. So Bank Nifty index also took a little bit of a support at this level of demand over here, this drop-based rally. And in fact, when majority of the indices or indices hit a level of demand, it's more or less a bounce is expected. So here you can see price came very, very close to this level, probably just missed hitting this level of 50,138. But then we saw a strong reversal move to the upside. Now, just like the Nifty, there is this level of supply, which is probably acting as a resistance point. But we can see here, we had multiple touches here and now price today has now created a fresh base rally within this area. So again, just like the Nifty, where I'm expecting that the price is most likely to push to the upside, we might see this level over here, base drop, level of supply 52,812 to 53,301. This is going to be the key level, and any breach above this level will probably induce more buying pressure. But this is going to be a key level. I still feel that it's not going to be very easy for the market to break this level. So watch out for 52,810 to 53,301 on Bank Nifty. All right, let's have a look at the Bank Nifty levels. And if you look over here, 52,810 to 53,301, these are going to be the key levels of supply for the coming week. And 50,138 to 49,628 is also going to be the key level. As you can see, the open interest is slightly higher at 54,000 and 51,000. But one can probably make an assumption that it is now not going to be very easy for the market to break the 51,000 level, and more or less there will be sideways to kind of a bullish move to the upside on the Bank Nifty as well. Let's move on to the Nifty Financial Services. So Nifty Financial Service, in fact, bounced nicely from this key level of demand, which was plotted last week, 23,295. And now it's again making its move to the upside. Very, very similar move possible on the Finnifty as well. We have this level on top of level scenario. I am getting a feeling that probably this is where the markets will take a little bit of a support at 23,300 odd levels. And the key resistance levels are going to be at 24,443 to 24,611. This is going to be the key supply level on Finnifty. Let's have a look at MidCap. So on MidCap, we had key levels of supply. I'll just refresh the chart here. And what we can see on the MidCap is that although the price came into this level of supply, it has eventually violated this level of supply today. Okay, which means now more or less mid-cap also wants to push to the upside. Now we do have a gap level here, so this is not a great level of supply, but we might see some profit booking coming in over here. Otherwise, there is a very high possibility of Nifty mid-cap making new highs. The strongest resistance level on the mid-cap Nifty is 13,400 odd levels. And now we are also seeing that there is a very strong put build-up, which has happened at around 12,950 levels. So 12,950 is going to be acting as a immediate support for the market, and 13,400 is going to be acting as a immediate resistance for the mid-cap index. Let's look at Sensex. Let's move on to the 125-minute chart. So the Sensex also has bounced from this key level of demand, just like the Nifty and the Bank Nifty index. And again, we are seeing a little bit of consolidation. Now, usually what happens is when the market starts to move down very sharply and then it tends to stop, it tends to consolidate for a few days. And it's very obvious that Sensex is also doing that right now. We are seeing a little bit of a rounding bottom kind of a formation over here, which may indicate that Sensex also wants to push to the upside. We have a very good supply zone at around 84,116 to 84,765 odd levels, which is nicely confluencing with the 84,000 handle or the open interest level. So we have two confluences. We have the open interest level confluencing, as well as we have the level of supply there. So it'll be a key level to watch out for in case if there is any profit booking that comes in on the Sensex. But other than that, 81,500 seems to be acting as a strong support for the market. So unless and until 81,500 breaks on the lower side on a closing basis, we should expect the market to move sideways to bullish in the coming few days or in the coming few weeks on the Sensex as well. Let's move on to the next index over here, which is going to be Bankex. So let's change this to Bankex here. And let's look at some of the key levels on Bankex. All right. So here you can see on Bankex, we had a slight violation of the level, but the candle did not close. And now we are again seeing a very, very similar move, just like we saw the move on the Bank Nifty as well. So pretty much now what we are seeing is 58,800 is the strong support for Bankex, and 60,000 is going to be the strong resistance, which is again nicely confluencing with this 125-minute supply zone level. So it will be key to watch out for that. Once the price gets into this area on all the indices, it will be interesting to see whether there is a sell-off that is likely to come on all the indices. So keep a close watch on 59,918 to 60,439. And just below that, we also have a level of demand, which probably has already tested once, right? So any breach below 56,552 will probably create more bearish pressure on the Bankex index. All right, from the indices, let's move on to the Nifty heavyweights. So let's quickly look at Reliance first, and let us analyze what Reliance is doing. So let's look at the 125-minute chart of Reliance. Okay, so we are on the 125-minute chart of Reliance. I'm just going to load the local data here. And perfect. So here we are on Reliance. We have a level of supply, drop-based drop level. We also have a little bit of a confluence of an open interest level close to 2,900 levels. And then we have this level of demand, which is nicely confluencing with this level of demand. So it'll be interesting to see that sooner or later, if Reliance gets here at 2,700, what is expected of Reliance to do? So are we going to be expecting a bounce, or is this level going to breach? That's the key question. All right. So keep a close watch on these two levels for the coming few days or for the coming few weeks on Reliance. Let's now move on to the next chart, which is going to be HDFC Bank. So let's change this chart. HDFC Bank. So slowly but steadily, HDFC Bank is also now trying to reverse after correcting closer and coming closer to the 1600 levels. And way back, also the 1600 level is a very, very strong support for HDFC Bank, which is unable to break. It has been tested several times, but this is acting as a very, very strong support for the market. Now, what are some of the key levels on HDFC Bank? So we do see this level of supply over here, which is a drop-based drop, 721 to 1744. This is going to be a key level of supply, which is also lining up with the Bank Nifty and the Nifty supply. So it'll be interesting to see what price does here. And if HDFC Bank starts reacting from the supply zone, then it's most likely that we are going to be seeing a little bit of a more weakness in the indices to come as well, especially on the Bank Nifty as well. So this is going to be a key area for HDFC Bank as well as for the Bank Nifty. All right, now let's move on from the world of indices to the world of commodities. So let's load the commodity charts and let's do a quick analysis of the key commodity markets. So let's change this to commodities and we will look at gold. That's because the contracts have changed. So just got to put the correct. Perfect. So now I have the December contract for gold. Let's quickly have a look at gold and let's look at some of the key levels of gold. Okay. So last time around, we spoke about this level of demand on gold, 74,422 to 74,010. Nothing much has happened here. But a very, very interesting resistance level now has been created at 77,000 levels, which means that gold may not find it very easy to break the 77,000. And the moment price comes closer to the 77,000 handle, it's more likely to probably create a little bit of a sell-off in the market. We do have more levels of supply. I mean, we don't have levels of supply, but we do have levels of open interest above 77,000. But now we'll have to just patiently watch and wait to see what happens when the price comes to the 77,000 handle. Let's move on to the next chart, which is going to be the chart of silver. So let's change this to silver. And let's load the contract on silver. So here we are on the silver chart. We have all the key levels of open interest plotted, and we can see that we had a level of supply lining up at 95,495 and price did come into that level of supply closely, came very close actually, reacted to it and then came into this level of demand. So right now there is a fight between bulls and bears which is going on silver. Gold is extremely bullish at this point in time, but it'll be interesting to see whether silver takes the same route as gold and decides to move to the upside. All right, let's move on to the next commodity. This time we are going to talk about copper. So let's look at copper. So I have the copper chart right in front and we had plotted this level of supply on copper as well and see how the price came into this area. Just barely touched this area of supply and now the prices are again coming down. We had this level of demand. Now this level of demand has been violated. So we're going to remove this from our charts. But there's also a very, very interesting level on copper, which is this area. Okay, so key level 799 to 813 on copper and supply 867 to 881. So keep a close watch for this week on these levels on copper. Let's move on to the next commodity, which is crude oil. So let's load the crude oil contract here. Perfect. So we are on crude oil now. And as we can see, crude oil is in a little bit of a mess. We have been speaking about the supply zone. So it has, price has gone there inside, deep inside, come down again, again gone in, again trying to come down. So Seems like crude oil is a little uncertain what next is to be done. But just in case, if the prices in crude start to cool off, which is a little bit of a rare possibility right now with so many things happening globally. But in case if that happens, then it is a good sign that the equity indices will also start moving to the upside. So that's going to be the key aspect or the theme in this week. But we do have a level of supply at 65.75, 67.47. So any kind of bad news in the market might trigger the crude oil price to hit this 65.75 handle to 67.47. So keep a close watch on this level for this week, specifically on crude. And last but not the least, let's quickly have a look at natural gas. So let's load the natural gas chart. And natural gas came into this level of supply 246.95 to 261, and then price came into this area over here. Now we are in a level of demand. This level of demand is slightly high on the curve, so it's not ideally recommended to take any long positions here, but this is a gap level, so we may tend to expect to see a bounce. The key level of demand is slightly better, which is below, which is nicely confluencing with the highest put open interest, which is 200. So instead of planning any long trades at this area, it is obvious that we would want to plan any long trades within this area over here, right? So this area would also act as a level of supply, this base drop area, because we have a confluence. So any move into 230, 240 zone will probably indicate more bearishness in natural gas. All right, everyone. So I hope you all enjoyed this week's analysis. And if you do like our analysis, please help us by hitting the like button. And do give your valuable comments in the comments section. And if you're still not a member of Sher Khan Education, so hit the subscription button and become a member so that you get all the notifications of all the videos that we upload on the Sher Khan Education YouTube channel. Have a lovely trading week, everyone. See you all next week. Bye-bye.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.